Good morning all and welcome to today's video. So today I have two pairs on watch and those are Euro CAD and Aussie Kiwi. So I'm going to break them down for you now and tell you what I will be looking for today. And without further ado, let's break these down for you. So Euro CAD on the higher time frames, we have once again, I've been looking for an entry from Euro CAD for a little while, but we have on the higher time frames this sharp move down followed by the sharp move up. We know that often that the sharpness of a move will dictate how price moves from that area, if it moves from that area at all the next time around when it reaches that area. And we know that the bigger players, if we're on the weekly chart, for example, this will be a good area for the bigger players who were involved in this move down to be getting out of their positions, okay, and flipping their bias and looking for longs. We also know that on the higher time frames that when price reaches an area of value, it tends to break below it if we're looking for longs, if it's going to rally to the upside. And the same is true on the flip side. It tends to break the highs before breaking back in. And that's what we call mass psychology. People getting caught the wrong side of the market because they believe that when price breaks below, it's just going to keep going and going and going. And many people are in this get rich quick mindset where they just want to keep riding a wave, not really knowing what they're doing, thinking, well, it's just going to keep going. I'm just going to sell any old way. And then, of course, boom, it moves to the upside. And of course, if they believe what was previously support becomes resistance once it's broken below, then of course they're going to be trying to get short here, look for retests, etc. But what we see in the majority of cases, those of us who trade the Falcon strategy, is a move to the upside. And you can see that similar level of aggression here. It moves down aggressively, moves up aggressively. It does the same thing here. Okay. We even have that the correction here before we tap into this area, and then a correction here on the way up. We have the same thing here. Move down, correction here, move down, move up, correction here, and then we rally. So price is often giving us symmetrical patterns to a large extent. So we tap into this area, we break below, catch people the wrong side of the market, push up, and then we see those impulse correction continuations, which we typically look for. Okay, we then have this larger correction. So price has no business at this moment in time coming all the way back down here because it's already tested the low. It's already taken out all the liquidity that was there. Of course, price can do anything at any time. But at this moment in time, it has no business coming all the way back down there. We typically see these corrections about halfway within a range. So within a range, I mean from here to here. The other thing that jumps out at me is this near miss, which is why I've got a ray line on there. We often see these near misses filled before price is going to move in one direction or the other. So if we have a near miss and it hasn't been taken out, so this high was narrowly missed by this one, which got close to it but didn't quite tag it, it's often the case that we'll push up to that area to take it out, which is why you can see my target arrow there pointing all the way up to there because we haven't actually tapped into that area yet. Okay, so we see this repetitive human behavior. These are psychological patterns. Okay, there will be, I've touched on this before, when people would have got short here, there would have been a lot of FOMO selling. Okay, sometimes these, not all the time, these FOMO sales, scoop back up immediately and drop. Sometimes these near misses take a long time to get filled. Okay, sometimes they work out, but we typically see these. There's often a lot of FOMO involved in these near misses when they move from an area, when they get close to an area but don't quite tap into it, and you can see that here. And just to touch on it quickly, what we typically do is when we have these impulse correction continuations, what we do is we measure the initial impulse, and then often the impulse out of the correction will be of a similar length, okay, to the preceding impulse. So impulse correction continuation, if that was to occur, that would take us up to here as well. So that all makes sense. So I'm trying to build a picture. I'm trying to build a story which actually makes sense. Okay, another thing is that you can see here, we have once again that near miss. Okay, so we have this base here. The price comes all the way down, narrowly misses this area. People start to see it get long here. People start to see it move that were waiting for it to get to this area, so they start buying. But it doesn't. You can see here, it doesn't really move up with much aggression. It kind of moves up with a little bit of aggression here, but then it just comes plummeting back down because there are still orders down here and orders being placed in this area by the bigger players that are, see this as the area of value, uh, which are dragging price back down. Okay, so people are trying to buy it. People are trying to buy it while other people are trying to placing orders in this area. And whilst there are still orders in this area which need to be filled for the move to the upside to occur, we then what do? It's a higher time frame liquidity point. We can see it on the weekly chart to a large extent. We then break below it as we normally do, wash out all the orders or the stop loss orders and all of the orders that were sat below here by the people that got long within this middle section, what we call a middle section within this three touch structure. So we have a impulse, correction, middle section, continuation within this larger impulse, correction, continuation. So the patterns that we look for are fractal, and then we have confirmation of the move up by way of a bearish candle, a stall in price, we wash out, but stall in price on the body, and then a bullish candle which closes above this, the body of this candle, and in this instance above this, the body of this candle as well. So that's a confirmed morning star formation. So then I drill down. I'm looking for entries now. Price has done what it needed to do. It's tapped into this area, washed everybody out, and there's no logical reason. Some price can do anything at any time, but there's no logical reason for price to come back down here other than if it was to fill this wick. But we typically fill the wicks of bearish candles, and you can see this is a bullish one. So that's also a positive confidence factor as well. It's the bearish wicks more often than not that get filled. And you can see I said yesterday that we were perhaps just coming down to fill this wick. So we moved into this area by way of a 1, 2, 3 touch structure, which is more clear on the lower time frames. But I was under the impression that we may be coming down yesterday, or the day before yesterday, to just fill this wick before we push back up. And you can see that may be happening now. Okay, as we drill down to the 4-hour chart, you can see impulse, correction, continuation, impulse, correction, continuation. Now price, this was a bit of volatility, I believe, caused by news, which is why this we have this kind of unnatural looking price action. This is not a typical. It may be hard for you if you're not familiar with the strategy or you've not been trading very long to ascertain why this has an unnatural price action. But once you've seen enough price action, you tend to spot things which we don't normally get. Sharp move up, sharp move down, and then a fairly sharp move back down again. That's quite erratic. So that's usually, if you look at the time, 1 o'clock on Friday, I believe there was some big news from the United States coming out. I think it may have been non-farm payroll. I can't remember now. But it's usually not news that causes that, which is why we don't trade the news, because it, generally speaking, it just causes whipsaw and doesn't really affect the longer term direction, because the longer term direction is usually already factored in ahead of time. But people haven't cottoned onto that the bigger players are getting their news before the likes of you and I. So that's why it's already factored in a lot of the time, or one of the reasons. So what I'll be looking for today is the following. I'm going to put that guy back in his box. You can see what we're having here. I was anticipating, although I was looking for a move down to here yesterday, I was anticipating that we may get a near miss again, okay? So you might be thinking, why have you not got your A line here? We may well tap into this area, but as a minimum, I'm looking for price to tap into this area, because this was where price moved from aggressively last time around. So we came down, and then we moved aggressively from that area, giving me a clue that this is where the liquidity might be, okay, and the stop loss orders and the limit orders may be sat just below here. And one of the clues is look, and I was anticipating this yesterday, but sometimes I'm not factoring in all of these things because these are daily forecasts. So I'm forecasting what is likely by the end of the day, not necessarily what is likely by the end of the week, if that makes sense, okay? Otherwise, it would just take me too long to go through all the variables. But I thought to myself, if this is an area of value, as opposed to this one down here, what we may do is near miss to here, okay? So we have the first inflection point, sharp move up, we have the move down. What happens? We get close to this area and we near miss it again. So that's why we can trade the patterns that we do, because they are psychological in nature. Why do you think people got long from here? Why do you think that is? probably because they saw price coming down. They saw price coming down. They told themselves they were going to be patient this time around. They weren't going to jump in too early. Okay, they were going to sit on their hands, and then one or two of them started checking the charts when they didn't need to. All they needed to do was set an alert like me and just leave it. And if it's not triggered, then just leave the pair alone. What happens? They see it start to move. It gets close to the area of value. They've been patient all this time. It starts to move. They start getting long, and then, oh dear, it's not actually committing. And it looks like we may be pushing back down to wash everybody out that FOMO'd into this move, to take out this low, to take out all the liquidity that is sat there as well. And we may push a little bit lower into this area as well, to when we're that close to this low as well. We may tap into that as well. And what I'll be looking for, just because this correction, this overall correction, is very wide relative to this impulse up from here to the top of the. So if we measure from here, what's happened here? Right, let's try that again. From here to the top of the correction, because the correction afterwards is very wide relative to the impulse up, I have to be mindful of that. And because we've had some erratic price action in here, and because this is not the cleanest looking correction I've ever seen, what I'm going to be doing, and because there's multiple inflection points as well, which price could gravitate towards, I'm going to be looking for price to just tap into that area, just as I was yesterday, and then push back up and flag. And then, we don't always have to have a third touch of a trend line, but then we would have that. If we moved up from here, we'd have three sections, the three drives that we look for. Okay, we would have the first drive, failed drive, second drive, failed drive, and if we move from here, that would be the third drive. Okay, the third attempt at moving to the upside, and that is typically when price goes. So first drive, second drive, third drive, and then if we get the correction afterwards, that is usually the banks and the bigger players stacking their orders for the next move to the upside. So what I would do then, if we got the impulse up in the correction, I would get long on the break of the flag. Or once we had the two bottoms, what I would also do is I would wait for price to push down to tap into this low. Okay, we don't know the size of the flag, but tap into this low. And then what I would do is I would look for a rejection candle, either a low test or a retrace candle, either on the 1 hour or the 15-minute chart. And I have rules in place for that, which allow me to drop down to the 15-minute chart. And if we did get that rejection, what I would do is I would get long with a market order, and then I would cancel the entry that I have set on the break. Okay, so that's the reason we do that, is that's an insurance policy. So sometimes once we've got the two tops, we don't always come down to get a second bottom. Sometimes we'll get very close, but not quite tag it, and then price just rallies to the upside. Okay, so there's a big difference between this kind of move and getting long because price got close to here but didn't quite tap it, and just getting long on the break of a flag, a tight flag, because even if that was to happen, I've got my stop loss placed just below, and a lot of the time these tight flags, they don't give you a second bottom, and price will still go, as opposed to these larger structures where price will get when it narrowly misses an area of value on the larger degree, price will usually come back down, versus in these tight flags it often doesn't. Okay, so there's a big difference. And if we didn't quite tag the low, then I would likely have a slightly wider stop loss to account for the fact that we could come down to give a second bottom of the flag. But that's what I'm going to be looking for. I've just gone into a bit more detail, but again, I've got my alert set just there. Okay, I don't think where were we? Yeah, we didn't quite tag that yesterday. We may have. I think we did actually tag that, and I've just set a new alert. But anyway, I'm going to go on to Aussie Kiwi. So Aussie Kiwi, if I just auto scale this, right, there we go. So on the higher time frames, right, we have this liquidity point here, right? What happens? We near miss to that area. We don't quite tap into it. What happens? We scoot back up. We near miss this area and near miss this area, right? So it's likely, and we do the same thing again and again. And then we have this one, I haven't got my trend lines on, but we have this 1, 2, 3 touch structure with a middle section. So if we just have a look at this, we have this structure. We had a middle section, so 1, 2, 3. Within this 1, 2, 3, and these 3 touches, we tap into this area. On this instance, we don't actually really break above it. We do break ever so slightly above it. So we don't always break the highs, but the majority of the time we will break these higher time frame liquidity points before pushing to the downside. Okay. In this instance, we just kind of literally just tagged it and then pushed down aggressively. So there was obviously enough liquidity at this liquidity point to send price to the downside, and we didn't actually need to break above to tap out all those orders. Okay. So you can see that now we have this potential impulse correction continuation. One of the reasons that this is lower down on my list is because we have near missed. Okay, we have near missed to this area, and you might be thinking, well, why are you trying to get long then? Why are you trying to get short? Well, the reason I'm trying to get short is because you can see we clearly have a lot of momentum to the downside. We've broken below this low, and if we were going to take out this near miss to fill here, then we would likely have reacted. We would have seen some evidence of that, particularly at this low, perhaps for that move to the upside. Okay, we may see evidence of that still from this area here to take out that high to then take out that low. Okay, but look how much we're on the weekly chart. Look how much room there is from there to there, even in that move before that move to the upside even occurred, if it even occurs at all. And then that might be the move. So we may take out that low, take out this near miss to here, and then push lower, and then we have this impulse correction continuation. But you can see we're well and truly below here. Where do you think the bigger players will be getting out of their position? They'll be getting out either here or here. There's no logical reason for them to just suddenly get out here and for price to move to the upside, especially when we have a confirmed 1, 2, 3 touch structure here, and we disrespected this low. We formed correction underneath it and then kept going. So there was not enough liquidity here to send price to the upside. Okay. So these are all things I'm factoring in. Okay. One of the reasons that this is lower down on my list is because of that near miss, and because the sequence is not what we would, not as good as with the other pair. So we have this impulse down followed by a massive correction. That's not your typical sequence. So the sequence on this is not as good. However, you can see that we are trending to the downside by way of impulse correction continuation. We have a running channel here. We have this first touch. We have a near miss to this high here. We scoot back up, take out all the orders, and then plummet to the downside. What happens here? We have this structure here. It commits to the downside. We come back up, push down, come back up, take this high out in the form of a 1, 2, 3 touch structure. You see that? First move, first drive, second drive, third drive, taps above, pushes down. We scoot back up, take some of the orders up, out. We have the same thing here. We have the first inflection point, the footprint in the market. We push down, push up, narrowly miss this, push down, push up, take out this high, and then plummet to the downside. So that's a completed structure. This is a completed structure. We also have a running channel in here, 1, 2, 3, and the last part of the move is corrective. So you can see this here, look, running channel, corrective move up after the 3 drives. So that gives me a clue that that's a completed structure as well. So with all that in mind, what I'm going to be looking for today is the following. You can see we have this sharp move here, okay, which is more visible on the 15-minute chart. This little sharp move up, which price narrowly missed again. What is this? Likely a FOMO move. We get a bit of impulsive momentum and then a corrective move down, giving me a clue that people are trying to sell this whilst there's still orders above price which need to be filled. Well, where are those orders? They're likely here. Okay. So what does that mean? That means that we have this potential impulse correction continuation within this impulse correction continuation. Okay, so what I'll be looking for today is the following. You can see when I did my forecast last night, we were down here, and I was anticipating, given that the market moves in a typically parallel manner, so where we have this, if we were to plot a trend line here and here, which I can now do because we've rejected from that area, we would potentially have a parallel channel. And what do you know? Look at that. So what I'll be looking for today is for price to tap into this area because the sequence is not quite as clean, particularly on the higher time frames. I'll be looking for price to tap into this area, followed by a push down on a flag, and then I'll be looking to get short on the break of the flag or within it. And I may be able to have my stop loss just above here. And we do have an inflection point just above, but I'm not too worried about that because this is a completed piece of structure and because it's some distance away from this structure. But because of the sequence and because this is sat just slightly above, and price could, given how it's been trading, do a variable of things. I'll be waiting for the push down in the flag, and that's what I'm going to be looking for today, folks. Thanks very much for watching, and I'll speak to you again soon.